Hey everyone, Phil Stevenson, Mortgage Nerd here, giving you our rate update. So today the Fed is having their meeting and they're expected to drop the interest rate another 0.25%. So what does that mean? That means, again, that's only the Fed fund rate. That's not your fixed rate mortgages. So as the Fed is lowering their adjustable rate, fixed rate mortgages are actually on their way up. Why are they on their way up? Well, first of all, the trade deal looks like it's going to happen. Unless all of a sudden it breaks down again, then we might see rates go down. Because bad news is good for rates. In other words, rates go down. Good news in the economy is bad for rates. Good news means rates go up. Just how it goes. People stop putting money in the mortgage bonds and they put them into stocks. Mortgage bonds and treasury bonds are what drive the mortgage interest rates. We have the good trade war, the trade war ending, good trade news. Brexit has good news because they have an extension and there could be a deal in December. And then finally, the stock market is at its highest level ever. Of course, whenever you reach your highest or lowest ever in anything, there's usually a bounce. But what's going to create that bounce? What's coming up? For now, rates are going up. Fixed rate mortgages, that is. Long-term rates, not the short-term rates. So don't get confused today when you hear rates are going down. Don't start calling me saying, hey, my rate's going down. No, fixed rate mortgages are going back up. They hit their lowest points recently. So let's look at the charts. You see up here, it's actually good. Mortgage bonds going up today and yesterday. Treasuries are flat. But these top points were the lowest rates. The lowest rates might be behind us for 2019. We might not see these low rates again until 2020, whenever recession comes. Here we are down here on the mortgage bonds. Switch over to the treasuries. So the treasuries follow more. The mortgage bonds are opposite. The treasuries are more in line. As treasuries go down, interest rates go down. So Treasury hit the lowest point, almost historically lowest point. This is the historically lowest point, 1.33 for the Treasury. So we were very close to that. Just like I said about stocks, when you reach those historic lows, historic highs, there's a bounce. So we bounced a correction. I like to say bounce because it's like a ball. We've been kind of flat, going sideways, but any good news could push Treasuries up, push interest rates up. Today's news might push interest rates up further. So if you're in process, you might want to lock your loan or at least watch. And if we see the rates start to go up, then lock it in. That's all. Just because the Fed is lowering the Fed fund rate doesn't mean your fixed rate mortgages are going down. It could go conversely the other way, probably until the next recession. That's when we're going to see another refi boom. Phil Stevenson, Mortgage Nerd. Thanks.